that in a second. Let me move on to Bayer, the German company. They want to buy Monsanto. They're prepared to pay $128 per share. It's an all-cash deal. Monsanto shares, however, are still around 106. I think that's where they are as of now. They certainly were before the market opened. Where are they now? All right, we're at 106. You know, look, Bayer is offering 128, and Monsanto is at 106.
Still it down a fifth on the deal price.
I've got an answer for this. Shah, you going to listen to me? Monsanto is the GMO company, wildly unpopular for its genetically modified organisms. Yeah. And the Germans want to buy it. GMO is wildly unpopular. It's banned in Europe. Yeah. I don't think the deal goes through.
I think that makes sense, but I don't know that the market's looking at that. I think the market is probably looking at it in terms of the debt load that would have to be encountered. Because Bayer's debt was, I think, $7.8 billion in 2011. It jumped to $17.9 billion last year. This is a $66 billion all-cash deal. Where are they going to get that money? What is it going to do to the combined entity? It's hardly. That's why it's 20% below. It's unlikely to get there because the deal probably won't happen.
All right, Liz.
Charlie Gasparino broke this story last night. He said it was coming. It's because, listen, watch this. They're going to basically dominate 30% of the market, and they'll be the world's biggest supplier of seeds and pesticides. So that's a big deal.
All right. They hate GMO in Europe. You do business in Europe. They hate it.
They really do. But this is what happens when you have so much regulation. You get more and more big companies and fewer and fewer competitors, and you have more of a monopoly in business because it's too expensive for little guys to compete when it's so hard to pay taxes and hard to get along with the regulation.
That's true. Look at